Hey friends, it's Ryan Brown. Breaking news, if you're in the market to buy a second home, as of March 19th, it's going to cost you a lot more money. Let's get into it. As of March 19th, let me read you the press release here from the FHFA. That's the government regulatory agency that oversees Fannie Mae and Freddie Mac. Acting Director Sandra Thompson said there will be a fee increase for second homes. It's for safety and soundness and to ensure the access to credit for first-home homebuyers and low to moderate income borrowers. These targeted pricing changes will allow the enterprises to better achieve their mission of facilitating equitable and sustainable access to homeownership while improving their regulatory capital position over time. So what they're doing is they are increasing the fees on second homes, and they're going to take that capital to shore up their balance sheets and hopefully redistribute that for first-home home buyers. So that's what their press release said. But let me just break it down what it means if you're in the market to buy a second home as of March 19th. So today, let's just use this as an example. A second home purchase at 20% down, your rate's probably going to be somewhere in the range of a 3.75 with no points with a decent credit score in general. If we fast forward this with the government changes, so after March 19th, a 3.75 instead of no points is going to have 3.375 points. So a pretty steep increase. So in order to, on a $500,000 loan, in order to obtain that same interest rate, you'd have to pay $16,875 in points. So that's a one-time closing cost to get the same interest rate.
What?
Or what you could do is you could raise the interest rate to like a 4.875 with no points. That would increase the payment on this example to $330 a month, about 118 grand over the life of the loan. So this pricing adjustment now basically matches the investment property pricing adjustment. So whether you're buying a second home or an investment property, the rate is probably going to be right about the same for most lenders. Now the good news is that here at Cross Country Mortgage, we have not implemented this change yet. So we are still locking clients in as long as we can get the close before March 19th at the lower rate. So if you have any clients that this is affected, and they're closing before March 19th, we can still close them here at Cross Country all the way up until that final deadline. So we're going to go ahead and do that. I know most lenders already made the adjustment, but we can certainly help those clients out. But just be aware, because this not only just affects the interest rate or points, but pre-approvals post this date have to be revisited and re-ran. Because if somebody was pre-approved on a second home for 300 grand or 400 grand or 500 grand, that's probably going to decrease substantially because now the qualifying interest rate is going to be much higher. So a lot to unpack. If you have any questions about this, please give me a call or text. Would love to connect with you. Hope this helps. We'll talk to you soon. Bye-bye.